Hey, are you a business owner, entrepreneur, or professional? If so, we want you to apply to be a featured guest on our show. My name is Adam Torres, and I host the Mission Matters series of podcasts. I've recorded over 3,000 episodes, and we are just getting started. How do you know if you'd be a good guest to be on the show? Well, only one way to find out, and that's to apply, but I'm going to let you in on a little secret. We want guests to have a story to tell, guests with a brand, a product, or a service that can benefit my audience of listeners. If this sounds like you, go to missionmatters.com and click on Be Our Guest to apply. I'd love to talk to you and get to know more about your story. Again, head on over to missionmatters.com and click on Be Our Guest to apply. All right, now let's get into the show. Hey, I'd like to welcome you to another episode of the Mission Matters Podcast, your source for all things business. My name is Adam Torres. You can follow me on Instagram at AskAdamTorres. Keep up with my book releases, book tour schedule, signings, all that other good stuff. Always love to connect with you there. And as always, if you'd like to apply to become a co-author of one of our upcoming books, just head on over to the website, missionmatters.com, and click on Become an Author to apply. All right, so I have Ryan Keys on the line. He's president and co-founder over at Triple Crown Resources. Ryan, welcome to the show.
Well, thank you very much. Glad to be here.
All right, so we have a great topic today, so energy, carbon, and the future role of hydrocarbons. So excited to get into this topic, and maybe just to get us kicked off, Ryan, tell us a little bit more about what you're doing over at Triple Crown Resources, please.
Yeah, it's private E&P. Our assets are in the Permian Basin, so we produce and sell hydrocarbons and develop more through the drill bit. So that's our business model, and we're very very ESG focused on that front. We think. It's happening right now where the companies that score well on the ESG front can attract capital. In fact, those are the only oil and gas companies that can attract capital right now. We want to position ourselves as a leader, at least in the private space, to still be the recipient of the private capital left available. Eventually, companies will start trading, kind of on M&A synergies. Instead of cash flow synergies, we might have these ESG synergies. What is your carbon footprint? Per barrel of oil produced, things of that nature. So that's our focus going forward.
Wow, what an interesting turn. Because this I guess you'd say this direction has been, I don't know, what would you say, the last 20 years or so, we've been headed in this direction. And so to hear somebody like yourself who's in the middle of it saying that it's having a big effect, I guess to me, that's a change. Because, my background's in finance. I was in that industry, I don't know, for almost 14 years, and the idea of ESG and all this. So it was kind of always on the horizon, but would you argue that we're kind of about there now, or just?
Yeah, absolutely, and in fact, the European super majors, we can't call them oil and gas companies anymore, because they don't call themselves oil and gas companies. Shell, BP, Total, Repsol, most of the European super majors are calling themselves energy companies, and they have a lot of capital earmarked for renewable projects. So, it's sort of an existential question for the energy, for oil and gas companies. What role do we play? And those European super majors have certainly, defined themselves as something different. And that's a trend that's not going to stop. We're kind of finding our way in this environment where there are headwinds to and demand destruction, not because we're consuming less energy, but because more of that energy is going to come from renewables and transportation fuel. More and more of that will go to electricity with electric vehicles and natural gas, with the increasing urbanization and all over the world, more and more people taking public transportation. So there are a lot of, a wide range of forecasts out there about, how much, let's just concentrate on oil right now, how much oil is going to be in demand in 10 or 20 or 30 years. Consensus is at a, there's just not going to be a lot of growth. Some of the more pessimistic forecasts for oil demand, if you're a producer, show some serious demand destruction in 10 or 20 or 30 years. The answer is probably in between, but there will still be enough demand. Say it's flat demand from here, to 2050. There's still going to be capital needed to develop oil and gas assets to keep up with that demand, to prevent a price spike and an extreme version of that, an energy crisis. So the space still needs capital, and there are companies positioning themselves to be the recipients of that capital, and we're one of them.
Mm. And so how do we turn these risks really around into opportunities? So risks in demand, risks in the change. I mean, because there's a lot of infrastructure already built. So how does this spell opportunity?
Well, especially on the carbon front, that's another headwind that at least oil and gas companies are perceiving. I mean, there very likely will be a price on carbon in the United States. It's probably going to look like it is in Europe. Perhaps it's a tax, but there will be a price on carbon. And a lot of oil and gas companies are viewing those as costs of doing business that are going to eat into our margin. But it's a commodity. Too much capital was devoted to this industry that created too much and crashed the price of oil. So we're getting to a point where we have to incorporate that carbon price into our planning. Since it is a commodity, that price will eventually, depending on how it's structured, be passed down to the consumer. So those who are the cleanest, producing oil, their upstream operations and midstream and refining operations are the cleanest, that will be increased margin if the price of the barrel is set at the dirtiest barrel that is necessary to meet supply. Those who are the cleanest will realize additional margin on their barrel of oil and barrel of oil equivalent. We're talking gas and NGL. So this is a huge opportunity for oil and gas companies to be as clean as possible, and this will create other other related just industries by themselves. So Triple Crown has taken one example of this. We've taken a big initiative on getting our methane emissions to basically zero, and a lot of oil and gas companies and folks in the industry again view this as a cost. We have to go fix our methane emissions. And number one, this is just something that most people agree we shouldn't be doing, is leaking methane. So we wanted to be very aggressive at this, very good at it. And what we found was a lot of new technology out there that makes this a lot easier to detect and certainly easy to fix. The economics just from the captured methane. I mean, you don't want to, if you're making widgets, you don't want to leak your widgets. You can sell them. Yeah. So why are we have a strong financial incentive to capture this and sell it? And methane being a lot more potent a greenhouse gas than carbon dioxide, doesn't stay in the atmosphere as long, but a lot more potent. So, but just on the value, let's just ignore the carbon price impact on that methane. This is what is the value of that methane? We found by fixing our methane, the total cost to fix those methane leaks, that paid out in about 15 days, and we're not atypical. We're a Permian Basin based company. There's this is the most prolific basin in North America, and we think this our experience can be extrapolated across most of the rest of the basin and perhaps most of the rest of the world. In finding, detecting, and fixing these methane leaks, it is in our best interest as fiduciaries to our shareholders, to ourselves and society, to fix these methane leaks. And Triple Crown's going to come out with a white paper. We've partnered up with Kairos to fly around with on Cessnas, detecting methane leaks. We're going to quantify the economics of finding and fixing methane leaks and provide that to the rest of the industry and say, hey, we should all be doing this. This is where oil and gas and the environmental movement and everyone in between can be aligned here. Let's go out and tackle this, and it'll make everyone better off, including financially.
Man, that sounds great, and it's hopeful, and I like to see the collaboration. Really, I mean, for the betterment of the entire industry, and obviously the offsets of that. So, what do you see really? I mean, as the role of the oil and gas company moving forward? Because it seems like it's changing. Like the dynamics are changing.
It certainly is, and those European majors are kind of the tip of the spear here, and we're just we're coming out of an era where there is continuous demand growth, up through the 2010 or so, continuous world demand growth, and that attracted a lot of capital, and that capital will not be as available. So it depresses asset prices and valuations for companies, but it makes individual projects increasingly more profitable. So what we've got to do is use that limited capital for its best use, and just create cash on cash value, which we have not done as an industry for the past decade. So that's number one. And with that, the risk, or rather opportunity, of a price on carbon. We definitely have to incorporate this into our business models, and this methane detection and leak repair. This is only one of many ideas. If for no other reason, we should be thinking about this as a hedge, oil and gas companies, for the increasing price of carbon, and at least in the States, we will have one. There are a bunch. Maybe this is for the next podcast. Would love to talk about them, but the methane idea is just one of many, and it'll be interesting to see how this all unfolds.
Yeah, no, I completely agree with you on that one, Ryan, and we're interested to hear that. But that being said, we're about out of time on this episode, but if somebody's listening to this, Ryan, and they'd like to learn more about Triple Crown Resources, or to connect and just, follow the progress and everything we're talking about today, what's the best way for people to connect with your brand?
Just go ahead and look me up on LinkedIn. Just Ryan Keys, and you're happy to interact and answer any questions.
Fantastic. Well, Ryan, been a pleasure having you on the show today. And to the audience, as always, thank you for tuning in. Hope you got a lot of value out of this. Hope you learned a lot. I know I did. If you did, don't forget, hit that subscribe button. We definitely want you to be a return listener or viewer if you're watching this on our YouTube channel. And Ryan, thanks again for coming on the show.
All right. Thank you.